Hi everyone, welcome back to the channel. So today I'm going to be making a really good video. If you've been following my channel for a while, you know I released a video a few months ago called the #1 volume profile trading rule, and it has gone on to become the best viewed and most popular video in my channel's history. So I thought I would follow that up and make now my #1 footprint chart trading rule. So this is the main thing that I look for when I am day trading the futures markets using Orderflow, and I'm going to give you a very brief explanation of what, for my style of trading personally, what I consider the #1 rule, or what I look for the most when I am day trading using this tool. Okay, so I'm going to be going over some examples in Sierra chart, but let's start over here just in trading view. This is mostly just sort of a presentation. We're going to do a quick summary overview again of the footprint charts and of the two different ways that I look at them, and also why this tool is going to be so useful. So when you're trading regular candlestick charts, you're going to be looking at something like this. This is what we call an OHLC candlestick. What this means is the open, high, low, close. Okay, and when we talk about open, high, low, close, what we're looking at here are the 4 pieces of information that a candlestick is going to give us. In this case, we got a bearish candlestick, so we're going to have the open right at the top of the body. We got the highest point of the candlestick, the lowest point, and then the closing right at the bottom of the red bearish bodied candle. Okay, so if we're trying to see what's going on inside this candlestick, obviously we can go into lower time frames. If this is a 1 hour candlestick, we can go into a 5-minute, and then we can see more in detail what transpired inside of this candlestick, how price moved. Now, when we're looking at a footprint chart, we're not only looking at the candlestick open, high, low, close, but this is a screenshot taken from the SP 500 futures markets. Every line you see here is 1 tick. So depending what the scale is of your market, in the SP futures, every 4 ticks equals 1 point. So every level you see here is 1 tick in that market, which is the smallest unit of measurement in the price scale. And what these numbers are going to be showing us on the footprint is total executed contracts at each of these levels. So basically, a footprint chart is going to give us like an X-ray inside of this candlestick in order to show us the buyer and seller actions inside of every one of these levels. Now, of course, there's various ways to look at footprint charts. The most popular is the bid by ask footprint, and in this case, what we will be looking at on the bid by ask is, on the left side we have the total sell execution, so the total number of contracts for this specific market executed to sell, aggressive sells on the left, and then on the right, total buy executions, so the total contracts to buy on the right side. Okay, and I have many videos on this on my channel. I also go very deep into this in my trading courses, which you can check in the link in the description below, or the link, you can see the link on top there. But basically, what we have again on the left is executed sell orders, or sell executions, not orders, but sell executions, and on the right, buy executions. Another way we can look at the footprint chart is one that I really like to use, and it's volume by delta. Okay, and in the volume by delta, we're gonna have two columns, but then on the left side, I have total volume executed, traded. So this is both buys and sells together, executed volumes at each tick level. And then on the right side, I have the total delta for each price level. As you know, delta would be the total executed buys minus the total executed sells. And then I also have an extra indicator that I have on Sierra chart, which is on top, I'm going to have a total delta for the candlestick. So if it's negative, that means there was more aggressive selling. If it's positive, more aggressive buying. And then on the bottom, I have total executed volume for the entire candlestick. So in this case, if we add up all the buys and sells, or if we add up all the total volumes here, it's going to give us the total number of executed contracts in this particular candlestick. Okay? And so you can see right here, it's very easy to understand if you just look at it side by side. For example, on this bid and ask, we have on the top 31 contracts executed to buy, 40 contracts executed to sell. So if we go to the delta, you can see we have a total of 71 contracts and a delta of -9. 31 minus 40 equals -9. And then the next one, 88 and 45. So 88 minus 45, positive delta of 43, etc. Okay, so that is in a synopsis what we will be looking at when we are looking at a footprint candlestick chart versus just a regular candlestick chart. Okay, so now let's move on to Sierra chart and let's go into the number one rule. Okay, so for these examples, I'm just going to focus on a few examples of intraday charts in the E-mini SP500 futures market, the ES. We're going to be looking at a 3,000 tick chart. You can use, 5 minute, 1 minute, whatever you like. But for day trading, I really like tick charts just because it helps to filter out the noise and gives me a lot more granular data on the markets, as is just measuring the number of transactions as opposed to just a specific amount of time. So the number one rule that we're going to look for when it comes to footprint chart trading is look for areas of high volume activity with trap traders. Okay, so more specifically, we're going to be looking around swing lows. We're going to want to see trapped aggressive sellers, and around swing highs, we're going to look for trapped aggressive buyers. Okay, and what do we mean by that? Well, if we have a chart just off of, I'm just making up an example here, but let's say, you can see we had a lot of support in this area before market pushed up. When we come back down here, we can expect in this area is going to be very significant. You can also see, well, this volume profile was developing throughout the day, but you can clearly see we were probably making a very nice edge over here on this high volume node. So this is a very significant area of support. So when market comes back over here, we're going to be looking then into footprint to see, once we retest these previous areas of big support, how the traders are going to be behaving. And that's where we're going to see, okay, if we have a lot of aggressive selling happening over here, yet market is not coming down and is starting to reverse, that is a sign that we're going to have seller absorption here. What that means is we got large passive limit buyers that are absorbing all this aggressive selling, and then they're loading up all their longs in order to then run it up, as you can see, back into higher levels. And this happens obviously on both extremes. We can look at it at highs and at swing lows. But what I'm going to show you here again is the rule. You want to identify areas on the footprint with high volume activity, because what this high volume tells us? High volume tells us there are large market participants that are executing or getting into the market. And as we know, there's two main participants in the market. We have the smaller retail traders that are, trading just a few contracts at a time. They're not really in capacity to really move the market or start any new trends. But then we have the big institutional participants, big hedge funds, banks, etc., who's looking to execute orders in the thousands of contracts. So they'll usually split up their orders into different icebergs or tranches just to get a good fill with little slippage. But they need, for every buyer there's a seller, every seller there's a buyer. So if we have a large participant around these levels that is looking to get long, they're going to have big limit orders, but they're going to need aggressive market sellers either looking to short this, hoping for a breakdown, in order to then use that liquidity, that selling liquidity, in order to fill in the buys on their limit orders in order to be able to reverse it. Okay, so that is it in a nutshell. Obviously, there is a lot of nuance as far as the entries. I've highlighted here some areas in yellow, and this is where we're going to go in to look at on our footprint. So again, 3000 tick chart. This is the regular trading hours. Markets open at 9:30 a.m. here, and you can see we had a push up and then a very quick reversal. So let's see what happened on this yellow highlight. And I have this set. This is a volume versus delta footprint. I like to use that because then I have this highlights. You can see here some purple and orange highlights. These are just a customized setting that I have in my study to let me know that there's high volumes. In this case, anything above 750 contracts, or no, everything above 1,000 contracts, I have it in purple. Everything above 1250 in orange. So that way I know where the high volume areas are. And you can see in this case, we have a push up, and you can see where did market push up. If we go back to the ticks, you can see the extended hour session. We have a big high volume node here, and we have our naked point of control right in this level where we pushed up. So going back to the footprint, you can see this area is where that naked point of control was over here coming from the overnight. And then we get this. We get high volumes coming right around that point of control level. And then we have a positive delta candle, meaning this candlestick right over here had a more aggressive buying than selling. And then look how this candle closed. We opened right over here, big volumes. Remember, all these green highlights on the right side are positive deltas, meaning at all these tick levels, we have more aggressive buyers than sellers right near the top. And then the market closed back down on this very bearish looking candlestick. Okay, so immediately when that happens, this is your area to focus. I like to just highlight or pay attention to this, because if we come back into these levels, this is going to be very significant areas of support and resistance, because this is indicating that there is big market selling absorption coming in over here. All these aggressive buyers near this significant level are getting absorbed, and that's very key. You want to look at this at significant levels, because you're going to get, big areas on a lot of, on different places on the chart, but you want to look for this to happen at significant support resistance, at naked points of control, at the edges of high volume nodes, etc. So this is a very clear divergence signal that all this aggressive buying is not getting priced anywhere, and we are in fact reversing. And then you can see once we break below, we had a very nice continuation move down. For example number 2, we're going to take this really aggressive trending day. These days are very tricky to trade because, I mean, looking in hindsight, you see a day like this and you're like, oh, I could just long on the break of this resistance and held all the session. But, it's very easy to say that in retrospect. But once this is happening, a lot of people are just trying to get a top. They see this and they think, okay, this is going to reverse now. Then it gets blown up. Then they see this and they're like, okay, this is going to come down over here. And then it blows up. And then if you try to chase it, then you can get, just a quick move down. Such as, if you try to long here, you get this move back down, which with a tight stop can just hit you before continuing. So these relentless trend days are pretty tricky to trade, but I'm going to show you how with footprint we can look, like I said, for areas of high volumes with trap traders in order to help us stay on the right side of the market. Okay, so in this case, we have this market over here. And this is also why I like to use tick charts, because if we were looking at this on like a minute chart, you can see that from here, 1229. If you're looking at a, like a 5-minute chart or so, this is going to look a lot less detailed than if you were looking, for example, like in a tick chart or at least like a 1-minute chart. But you can see over here we have this breakout, we continue pushing up, then we had again another little trend line broken. But in this little area you can see we started forming a high volume node because we had volumes accumulating right over here. So if we go into the footprint on this, you can see right over here, we have this consolidation. We have high volumes accumulating right on this action. And then on this candlestick as well, you can see we have aggressive selling near the bottom, negative total delta, and yet we have a green candle. And then we continue on the push up. So then in the future, this overall area is going to be a very significant level that we can look for if we would come to retest to find support at this levels. If we go on even higher and we look at what was the top of this day of this trending move, you can see here we had this move up into this high. Then we came down here and make about a double bottom here. We're forming this high volume node, and then we push up again into this highs, and then right over here we do have a break in market structure just to close out this session. But let's see what happened on this yellow area when we're revisiting this previous high from the session. So if we continue pushing up, you can see we had the high over here, and you can see we had very big delta on this candle, which was the high of the day. We have some high selling volumes. In this case, this is not a divergence because we have high volumes, but they're selling near a swing high. So in this case, this is more indicative of possibly a top and a retracement over here. We don't have trapped aggressive buyers, we have aggressive selling, and then you can see a big reaction down. So this is going to be a very significant area now to focus on. And then if I zoom out and I highlight that area, you can see this area of big volumes proved to be a very significant area of resistance when we came back into a retest of this level. And then what do we see here? If I zoom in, we can see a lot of orange and purple highlights, and they're mostly green aggressive buying all near the top of this previous high here. So we're getting a lot of high volume aggressive buying, and yet market, it is not going anywhere. Here we have a nice divergence candle here, very aggressive buying in this area, and yet we break below all the swing lows right over here. Then same thing here, and then that just reverses the trend for the day, and this ended up being the high area of the day here near the value area high. Okay, but again, you can see how we identify high trading volumes, trapped aggressive buyers near a swing high, and that marked off the exact area for us to then have a sell-off. Okay, and for our last example, we're still in the same area. This is the example we just highlighted, the big trending day with this double top here in the reversal. Asia extended hour session. You can see Asia and Europe sessions, very choppy in a very small range. Then regular market hours open. We have one more drive up into this high volume areas and a rejection again. And then on this regular trading hours, we have another push up here right before 2 o'clock. And then you can see this push up, and we're going to look at what happened inside of here near this previous area of big volumes and buyer absorption. So let's dig right into this level here. So we have here, this was the Asia and Europe session. And then here we have our regular trading hours. And then the same thing. You can see right over here. We're coming back into that significant swing highs. So remember, this is previous day highs right over here, which we're coming over to retest. So again, very important to look for key levels. So we had a retest of previous day highs right into this yellow highlighted area. And if we look over here, we can see same thing. We're back over here. Purple highlights all around this area. Aggressive buying near the top. A nice divergence here. Aggressive buying all around these levels. And yet the market is just reversing. And so this indicates there's still big passive limit sellers defending this 55, 60s levels. And then you can see we had a very nice reaction right around yesterday's high, which was right around this level. And then again, a reversal down. Okay, so much it. Again, if you want to learn more about all these strategies, make sure to check all my trading courses. Link is down in the description. Make sure to subscribe to the channel, and I will see you all in the next one. Take care.